to introduce our next guest, former CFTC Chair Chris Giancarlo, more colloquially known as Crypto Dad, is also the co-founder of the Digital Dollar Project and senior counsel at Wilkie, Farr and Gallagher. We have lots to talk about with Chris. Chris will also be speaking right after this at the Money Reimagined Summit. But first, let's jump into a brand new crypto bill by Senators Gillibrand and Lummis, which is sort of a landmark bill that proposes very wide-ranging crypto regulation. So, Chris, let's first get your thoughts on what are the highlights of the bill? What are the most important features of this bill?
You know, what's so important about the bill is, firstly, it is the first step that Congress is taking to wade into crypto broadly, not just narrowly in a few narrow areas, but crypto as fully realized, and not just as a tradable asset class, but its full potential to really revolutionize money and finance and banking. And so that is so important. Secondly, it's bipartisan. The only thing that's really going to emerge, in fact, we need it to emerge as bipartisan so that one party is not vested against it, another party vested in it. We need both parties vested in it. And it's comprehensive. It really addresses everything from tax issues to regulatory issues to national security issues. So I really commend the two senators for coming together on this. This is going to be the bill on which other issues are latched onto, whether it gets done this year or next year. The important step is it's bipartisan and it's comprehensive.
Yes, I think that's a great summary. So let's just get into one aspect of the bill that I think you'd have really interesting comments on. So the bill basically delineates more clearly the roles of the SEC and the CFTC. And it actually gives a lot more power to the CFTC. What do you think about that? Is that a good idea?
Well, I'm actually surprised that people are surprised by that. The CFTC was actually formed in the 1970s when a breakthrough financial product came along that could and did revolutionize financial markets, and that was the financial future. It allowed the entire Western economy to go off a gold standard to a dollar standard because they could hedge the risk of dollars. And when Congress and the White House in the 1970s saw that innovation, they said, who do we give it to? Let's give it to an agency with a commitment to innovation. And it was given to the CFTC. So the CFTC was taken out of the Department of Agriculture and given a mandate for innovation. So there should be no surprise that once again we have a new innovation that could revolutionize markets, and the CFTC is given responsibility to make it happen.
Okay, back in April, SEC Chair Gary Gensler suggested exploring ways that this SEC and CFTC could work together to form some crypto regulation. What are your thoughts on that?
Well, I'm glad Chairman Gensler said that, and I applaud that. But in fact, that's what we've been doing since 2017. When I was chairman of the CFTC and Jay Clayton was chair of the SEC, we formed a crypto task force between our two agencies that met every 2 weeks to analyze different cryptos. So the rudiments of the agencies working together are there. What it requires is tone from the top of the heads of the agencies to make sure that task force. And in conversations I've had on Capitol Hill, I've recommended that that task force be expanded into an actual bureau between the two agencies that meets on a regular, ongoing basis and is separately staffed.
Chris, switching gears, if I may, a little bit. I'm curious your thoughts on algorithmic stablecoins. Terra collapse, right, in the UST. Are they exciting innovation? Is it a dangerous gambit? What's your view on that from a digital dollar perspective?
Well, you know, a lot of people focus on crypto for its asset class factor, right? But I don't. I think of crypto in a different way. I think of crypto, broadly defined, as a series of protocols for the internet to be used to establish the ownership of value and the transfer of value. In the same way that TCP/IP allowed the internet to be used for communications, the same way that Bluetooth and 5G technologies allow devices to talk to devices, crypto are a series of protocols allow the internet to be used. And so experimentation with these protocols is vitally necessary to get to a future internet of value, right? The internet today of information is a series of protocols. You have many, HTTP/ML, you have the different ones used, right? We're going to need different protocols, whether it's the blockchain protocol, the Ethereum protocol, others for an internet of value. And so I encourage, and one of the things I like about this new Lummis Gillibrand bill is it encourages innovation and doesn't stifle it.
So we could get to a point where a stablecoin doesn't have to be backed by a dollar. It could be an algorithmic structure. That's a future that you could contemplate.
Very much so. In a healthy future, we should have multiple protocols and lots of choice for society.
So, Chris, in our next session, we're going to really do a deep dive into digital dollar, but I do want to ask you just a little bit about it here. If you could just provide some updates on some of the digital dollar work that you are doing.
So we launched the Digital Dollar Project 2 years ago with one central thesis, and that is that money is as much a social construct as it is a government construct. And society has got as much right as government to experiment with digital money. So we launched the Digital Dollar Project to do just that. And a month ago, we announced something that I'm not sure people fully realize how important it is. And that is the first experiment with a U.S. central bank digital currency in the world. But more importantly, the first experiment with any type of central bank money entirely driven by the private sector, not led by a central bank. And that's Project Lithium, an experiment where the Digital Dollar Project is doing with the Depository Trust Clearing Corporation.
Also, just want to turn to a different story. So the CFTC right now is suing Gemini, a crypto exchange that has, since the longest time, has prided itself in being regulatory friendly. And so they are being sued for market manipulation, or at least making misleading statements about market manipulation, according to the CFTC. And this was during your time when you headed the CFTC. So I wondered, your thoughts when you had heard of this case, and did you have a feeling that you were being misled?
Yeah, Christine, for good reasons. It's always been my policy not to comment on CFTC enforcement, especially enforcement that goes back to the time I was at the agency. What I will say, and what I've written about in my book, Crypto Dad, The Fight for the Future of Money, is that the founders of Gemini have been committed to a ask permission first, not forgiveness approach to regulation from the very first. In my book, I talk about my first meeting with them in 2014 when they came to us and said, how do we do things the right way and work with you? And that's just a matter of the record. I've written about it, and their commitment to that, at least in my experience, has been absolute.
Chris, we only have time for one final question. I just want to ask you sort of a big picture question, something that's been talked a lot about in the crypto industry with this new bill and also with the collapse of UST. How do you think the crypto industry could do a better job of regulating itself? Are there certain things that the crypto industry could do to sort of avoid these kind of catastrophes going forward?
Yep. A few months ago at a meeting in the Bahamas, ex-President Bill Clinton said to Sam Bankman-Fried, he said, the one thing your industry needs to do a better job of is communicating your value proposition. And he said, your industry tends to talk in code that each other understand, but the broader world doesn't. And I have to say, I commend CoinDesk TV for being out there, helping to translate what this industry does into language that every person can understand. I think we need to continue to do that into the future.